Hello traders and welcome to this video analysis looking at technical analysis and charts. So traders, we finally move away from the theoretical analysis of an economy, and now we are looking at two economies compared to each other in terms of an exchange rate between the value here of the British pound and the Norwegian kroner. So traders, a chart is simply a pictorial display of an exchange rate. Now, a chart is very interesting because it allows us to have a look at a currency pair and look at the history of prices between exchanges of two currencies, and we can also find out a lot of information about whether a currency pair is trending in the direction of one currency going up against another, or if it's trending in the direction of one currency going up against the other in reverse. So really interesting. It's really cool. I'll just go over the key factors that you need to understand so you can have a thorough understanding of what you're looking at. So just remember, traders, the British pound against the Norwegian kroner exchange rate. So the British pound is the base currency. Now just remember when I showed you at the beginning of the course when you was reading about why exchanges go up or down. So whenever the British pound is going up in value against the Norwegian kroner, we can see the exchange rate price is on the right hand side. So for an example, back in the 10th of December 2018, the British pound was buying 10 coronas and 70 cents in return. So £1 buys 10 coronas and 70. As you can see, the exchange rate was here, and then the pound went up in value against the Norwegian kroner to £1 buys 11 coronas and 50. So of course, what we're seeing is in an exchange rate, the green candles are representing, and this is looking at a daily chart. So if I just come and have this here so I can give you a better view of what we're looking at, traders. So right here, traders, we're having a look at the Norwegian kroner. Sorry, it won't give me a second. We're looking at the Norwegian kroner against the British pound. Just ignore all these things on a side for a moment. That's when I'm giving an understanding of what you're looking at, just starting off. So traders, to understand, remember the British pound against the Norwegian kroner. So on a daily chart, this is the chart of the daily, each day, the exchange rate price of this currency pair on the daily chart. We can look at a weekly chart, and this is showing us on a week by week basis where the exchange rate between the two currencies is going. The price of £1 buys 1 Norwegian kroner. And then you have, for an example, monthly charts. You have 4-hour charts, which are a lot more condensed data. I'm looking at the price of an exchange rate every 4 hours, or you can even go down to 5-minute charts, where it's showing you the change in exchange rate price every 5 minutes. But more importantly, just to understand, traders, it's very simple and it's very easy to understand that if the exchange rate price is showing £1 is going up in value in terms of it's buying more Norwegian kroners for each pound you exchange in exchange rate, the exchange rate price is going to be going up, and each candle, now these are called candles, is representing 1 day's trading. So as you can see, the opening price was at the bottom of the candle, and then of course we can see that during the day the lowest price it went down to was 10.57, and you could see it on the right hand side, the exchange rate, and then the highest price it went to was 10.96, and it closed at exactly 10.96 as well. Okay, so small wicks. As you can see, wicks are basically the opening price is the bottom of a candle, and when it's on a strong day in terms of it going up in value for the base currency, of course it's gonna open at one point and close above the exchange rate price, because it will be showing you on the right hand side that the pound has now opened up in value and is now buying more Swedish kroners in advance. And the red candles simply show the complete polar opposite, and they might be showing you that on this day, for an example, prices went down in the Norwegian kroners favor, and the pound was buying less Norwegian kroners. So for an example, the beginning of the day was £1 buys 11.02, and then at one point during the day it was £1 buys 10.85. So we could see during the day that was a move in the price of the exchange rate. So simply put, traders, we're looking at an exchange rate between the British pound and the Norwegian kroner. Here we're looking at a daily chart, so the daily prices of the British pound and against the Norwegian kroner, and each candle represents 1 day's worth of trading. Okay, so that's really interesting to understand. It's quite simple. You can see the dates along the bottom. You can use this analysis. This is TradingView, a really good website you should go and have a trial for. And you can scroll out. You can go look back at historical prices. You can squeeze the chart lower and really go back in history and have a look at where an exchange rate price has gone. So it allows you to really monitor an exchange rate price. But more importantly, it's just showing you right now where the price of the exchange rate is at this current moment and where it has been in the past. So it's very simple to understand and easy to gauge the exchange rate price of a currency. But more importantly, what we want to be looking at is a currency pair trending in the market? Now, when I say trending, I mean, is the British pound going up against the Norwegian kroner on a long-term basis? So is the pound's appreciation in the Norwegian kroner continuously going up? So as we've seen recently, we have seen the exchange rate go higher, right? As we can clearly see, we're seeing higher lows. So the lows of the currency pairs exchange rate prices are going higher in the market, and we were seeing the prices and the higher highs going higher in the market as well. So when you see trending market, what you're really looking for is something like this, where you see higher highs and you see higher lows. It is what we call a trending market. So the market is going up in the pound's favor, I guess, in Norwegian kroner, because clearly the exchange rate price continuously goes higher as time goes on. Now we must remember that exchange rate price never moves in straight lines. It always moves up in time in terms of like a zigzag kind of formation. And you'll see this in any currency pair you look at in the world. For example, look at the pound against the US dollar. Don't worry about all these lines on the chart. I will be going over this in more detail. So here's an example. And you want to chat about interest rates. This is a perfect example for me to actually show you. So in 2017, the pound was really going up in value against the dollar. So we can clearly see over a longer term basis, starting in 2017 and even into 2018, we could see for over a year, the pound was continuously going up in value against the dollar. So at the beginning of 2017, it was £1 buys $1.19. You can see the exchange rate price on the side over here. So look, you can see it here. £1 buys $1.19. And by 2018, the pound had risen to £1 buys $1.43. So clearly, traders, we have a trending market. We have higher lows and higher highs. So the lows of the trend continually keep getting higher, and so do the highs. So we can clearly see we're trending. We're going higher in the market. The pound is appreciating in value against the US dollar. And this was because interest rates in the United Kingdom were actually going up in 2017 after the Brexit referendum. And I will have a video in the members area explaining this in more detail. But then markets realized that the UK central bank wasn't going to be raising rates as aggressively as they previously anticipated. And then in 2018, the US central bank raised interest rates 4 times, and it completely reverses trend. Because remember, traders, as we have already watched interest rates drive the value of a currency, and the trend reversed to the downside. So it's easy to understand, clear, just to see what is a trending market. Is exchange rate price go up in the pound's favor? So is the pound buying more dollars in exchange? And every time, each day ends up with a higher price. We get candles going higher. Some days we get red candles, but we need to look at the trend, because as I said, nothing moves in straight lines, traders. A trending market always moves in zigzags. As we can see, a trending market is always going to be moving in terms of it's going to be going up, and then we're going to get a small pullback in price, and then again the trend's going to continue to the upside. So this is how the market plays out. This is what you call trending markets. All right. What we really try to identify is the longer time trend going up or is it going down? It's quite easy to see when you go to the bigger time frames, which is why I always say to people, well, make sure you do your analysis on the highest time frames and not the lowest time frames, because what you'll find is when you go to lower time frames, traders, so as you can see here, we have a downtrend in the British pound against the dollar. But at some point, it's in the market when you look at smaller time frames. For an example, you might open a market and say, oh, we're in an uptrend for the pound against the dollar. But no, let's look at the bigger picture on a daily chart, and we're clearly in a downtrend. So always keep your notice on the highest time frames, such as the daily, the weekly, the monthly, and you're really going to get a clearer picture. So as I can show you here, traders, when we're looking at the pound's trend against the dollar, as we can clearly see, as I was showing you, there are a lot of red candles and a lot of green candles. But if you go to the weekly, it becomes even more clear to see in terms of a clear uptrend for the pound against the dollar. So you really always want to be looking at higher time frames because it makes it just really clearer for you to see how aggressive we are trending in the markets. So this probably isn't the best example. But again, less candles, much more of a clearer trend when you look at the higher time frame. But if you go to a monthly, it's even more clear, as we can clearly see. Look, we're just moving higher and more aggressively to the upside. So of course, the lower down on the time frame you go, the more candles you're going to see. But again, traders, a chart is simply a pictorial display of an exchange rate price. Just going back to the pound against the Norwegian kroner. A chart is a pictorial display of an exchange rate price, and we always have situations where we're either trending in the market, so one currency is going up in one direction against the other currency, or we have a situation where the other currency is going up in value against that particular currency. But also sometimes, traders, we have situations where currency pairs are not really trading in a trend. And this will be driven usually by, for an example, interest rates not going up or going down on either currency. So if you look at the euro against the Japanese yen at the moment, we can clearly see that for the last few months, we're not really in a trend because we're not making higher highs or higher lows. If you really look at the bigger picture, we're really just trading sideways. And this is what will happen in the market where we don't have interest rates going up or down in either currency, domestic economy. And basically, as we remember, our traders, investors are looking for that carry trade opportunity. And when they don't see it, there's no trend because the expectations of interest rates going up is what's going to drive the currency pair. And when there's no expectations, we'll just range. A range is usually a curve between support and resistance levels. So as we look, we can clearly see around 124. And you all know about support resistance in another video I will upload, so don't worry about that too much. But you could see around a support level 124, we are getting bounces, and then also a resistance level around 127. So it is bouncing between the two. And this is what you call a range in market. And markets will continuously range until there is a trend. And when there's no trend, I'm in the market base of interest rates going up, we will just continuously trade in a sideways fashion in the markets. Here again, clear example of a trending market between support and resistance. If you look at euro against the Japanese yen, we had been trading sideways in this exchange rate from September until it broke out in December. So for 3 months, this currency pair was just moving sideways, bouncing off support level 132 and then bouncing off resistance level and just going sideways. So this is a trending market. And remember, trends are always driven. So this is a non-trending market. And the only reason trends start to happen is when markets are anticipating something being implemented by the central bank, either a tightening bias or a loosening bias with rates. So I hope that makes sense. That's just a short video explaining technical analysis. It's really simple to understand when you're looking at a chart. Technicals is basically just showing you the price action of a currency pair. Where is price going? Where is exchange rate going? Is it trending in the direction of the base currency? Because it's trending in the direction of the quote currency? Or are we just ranging between the two? And then, of course, our job is to find out why is the market trending. And 9 times out of 10, it's either to do with market expecting deflation in one of the currencies or inflation in the other currency. We know if there's deflation in one and inflation in the other, where the market's going to be going is obviously going to be going in favor of the inflationary currency, and vice versa with interest rates, as I already have explained. So I hope that makes sense. That's the video on technical analysis. Thank you for watching.